As a business owner, it's important to understand the ocean that you're swimming in. We have a video on blue ocean versus red ocean and how your competition's stacking up to you and so forth. But on a larger macro scale, we look at the economy that we're in, the U.S. economy, and I just wish that I could get on one of these programs with the media, one of these pundits, and talk about the reality, the charts that don't lie, the statistics that really show us how things are going. Not that all of it's good. I'm not trying to say we're in a great economy, but some of the most important factors are just absolutely completely ignored. And so I'm going to talk about a couple of those today. First of all, you look at the S&P, look at the 500 biggest companies in the country. And the first thing we see is that the operating profit is higher than it has ever been. So we are hitting record earnings per share. Now, a lot of people will look at that and respond, oh yeah, but they're doing that by laying people off and cutting costs and shipping jobs overseas. Wait a minute. I don't care how they're doing. As long as I'm not running a sweatshop, as long as I'm not stealing, I don't care how they're making a profit if they're doing it honestly. And the reality is we're getting a great profit. We're getting record profits from these companies. So we look at year over year growth. We look at projected growth, and we see, wait a minute here. Profit margins are good. And so now as a small business owner, I don't have to use this excuse anymore and have this misconception in my mind that, oh, my business isn't doing well because just the U.S. economy isn't doing well. And so, wait a minute. If your business is any model of the United States 500 biggest businesses, then your revenue right now should be higher than it has ever been. And so we can't really use that excuse to justify our performance in our small business. Guess what? Things are looking really good from an earnings standpoint in the economy right now. Maybe less employees, maybe shipping and importing and doing more of the things that people on a macro level in the economy don't enjoy doing for the overall health of the deficits, our twin deficits that we talk about, the national debt and the trade deficit, certainly the lack of a surplus that we've had since 1999. For a couple of quarters, I think in 2000, we had a little bit of a surplus. But take a look at the cash. Now you think about if I'm a bank and I'm going to loan somebody money to buy a home, how much money are they making? How much cash do they have in the bank? Right? So that's what we're looking at here. And so we look at how much cash corporations have right now. Well, what was the healthy economy in 2000? Most people thought in 2000 it was wonderful, and it was about 14-15% a percentage of current assets. And in 2005 and 6, it seems things were pretty good. We're at 20%. Well, today we're at record high percentages of the corporate amount of cash we have. They're very, very liquid. Corporations have a lot of money. You talk about Microsoft, they could buy 40 space shuttles with the amount of cash they have. Google, some of these other companies sitting on a lot of cash right now. Now, to me, that is a perfect storm for pent-up demand that we have, if you look at the top right, in mergers and acquisitions, which has been much lower. You see, we have a suppression of mergers and acquisitions since 2007. Now, we had this pent-up demand in 02, 03, 04. In 05, it started to ramp up, and look what happened. 06, 07, mergers and acquisitions went through the roof, about 3 times what they are today. And so we see a lot of merger and acquisition activity. So as a small business owner, you're probably, especially if you're big enough to get the attention of these bigger companies, they're paying premiums for these right now. They're paying top dollar, and that's likely to pick up because of the pent-up demand. There are many economies of scale that are realized by these merger and acquisition activities that we see picking up. Now, the other factor we're going to look at is I'm going to look at monthly rent versus monthly mortgage payments. In other words, it's cheaper right now to buy than it is to rent. Now, that's a pretty important statistic when we talk about the housing bubble. People are worried about things getting much worse. Well, wait a minute. The most important statistic is price. How much are homes selling for? There is your lagging indicator of the health of the housing market. Certainly home inventories are significant. as you look at home inventories going forward. Usually we're still having babies. We're just not building as many homes. Usually you have about 1.5 million homes as a need. That's your baseline need. So if you're only building 700,000 homes a year, which is what we're building, and you need a 1.5 million homes per year and another 200,000 homes per year burned down, we're talking about inventories dropping. So you look at inventories right here on the bottom right, they're more in line with historical averages now. So we're really where we should be on inventories, despite all the talk about foreclosures and everything else. And then, of course, on the left-hand side, you can see prices have stabilized and even bounced up in most areas. Now, next thing I'm going to look at is unemployment. I've got to have jobs. So as we look at 2008-9 recession, there were about 9 million jobs lost. Well, we're not doing great in that category. We still have 22, 23 million people unemployed. And the way that they people talk, well, they do the unemployment numbers differently today. No, they don't. They have been using the same methodology for determining what unemployment is today as they did 10 years ago, as they did 20 years ago. I think for 23, 24 years, they've been using the same exact standard for underemployed, for unemployed, and so forth. Now, granted, I don't like the standard either. I think there's many flaws embedded in it, but that's kind of how our government operates. You see, what you have is any administration is going to want to skew the statistics in their favor. And so the way that we've determined what unemployment is, nobody wants to change that, because if they go with reality, it's going to make them look worse. And who's going to want to change that on their watch? So, last month, it's not shown on this chart, but we just recently, I think a week or two ago, had 180,000 jobs created for the month of June. Was 70-80% better than was expected, so that was pretty good news. But unemployment did bump up to 8.3, so this has already gone up to 8.3 from what it's showing here at 8.2. So jobs are obviously the big drag on this economy. You've got jobs on one side of the barbell, and then you've got obviously our deficits and our debt on the other side of the barbell. Both of them need to be fixed for us to make any progress. The same principles operate in Spain, Portugal, and so forth. Now, finally, it's interesting to show which sectors jobs are being created in. If you look, last 12 months, you see that there's been about 1 million jobs created, closer to almost 2 million jobs created, 150, 170,000 jobs a month. Typically, there's been some slow months in there, but most of these jobs are being created in 2 or 3 sectors here. Financial business services, healthcare, leisure, and hospitality. All 3 of those revolve around where the money is in this country. Most people in this country are 50, 60, 70 years old. They're baby boomers. Every 8 seconds, someone's turning 65 years old. That's a lot of people that need healthcare. That's a lot of people that are interested in travel and leisure. And that's a lot of people that need business services and certainly need financial services. Education's becoming more competitive. Trade and retail, it's getting a little bit slower as we develop a global economy. But these other things, just at a completely stagnant. Mining, government, which, you want to talk about a expansion. The government has doubled in size in the last 10 years. And so why do we assume probably not going to be too much job creation there? Because they have to cut. There is no more room. You can't add another, let's add another division. Let's add another committee. Let's add another regulatory board. How many more can you add? And so we don't see a lot of, we see that at this point, maybe even starting to contract on the government side. In fact, hopefully, because anytime you eliminate a government position, you create a private sector position, which is generally going to be much more effective in their scope. Manufacturing, obviously, when it's $18 an hour to hire someone in the United States, between benefits and unions and all the expenses that we pay and the payroll taxes and so forth, when you can hire someone for $1.50 to do something in China and it's $18 here, you're going to have manufacturing jobs go down. That's a given. So as we look at the economy, there's some positives, there's some negatives, but as we realize, the end of the day, the most important things, the price of the home, the most important thing in the economy for a pulse. You want one statistic, lagging indicator on the economy? Look at earnings. What are corporate earnings doing? That's a very important factor. 70% of that's driven by the consumer. That's a big deal. But you need look not much further to get a pulse on how the economy is doing from these few charts that we looked at. Which again, we're not debating. We're just simply looking at statistics. So this is reliable information.